All right, well, welcome back to the iWealth podcast. We got some important stuff to talk to you about, business owners. I'm with JP and Shawn that are in my office, and I've always said surround yourself with better people and then you look better. So here we are today, guys. There's things going on. If you're a business owner, there's some stuff going on in our world from the federal standpoint with the Secure Act 2.0, and then on the Minnesota side, they've got their own secure choice or something like that. So I don't fully understand it, which is why I'm going to be the moderator today. But Shawn, let's start with you. Where do you want to start? Like, if you were a business owner, which you are, and we are, like, what do we need to be concerned about, or at least paying attention to going into 2026? Like, what's going on?
Yeah, by now, I would hope that several people on your trusted team would have reached out and said, there's going to be employee compensation changes for next year, mandated things that you need to be rolling out for your employees, and then also flipping the hat around and looking at it in terms of your own benefits. What are you doing as your own employee? And those rules are changing too.
Okay. All right. Yeah. JP, how have you thought about some of these? Give me your top issue that a business owner needs to be thinking about.
Yeah, so Minnesota is now requiring employers to enroll in what's called this Minnesota Secure Choice program. That if you're not already offering a business plan or retirement plan that's compliant and fits into the Minnesota kind of mold, then they're requiring that you participate in this Minnesota Secure Choice program. And it's basically a payroll-deducted Roth IRA or IRA, and it has some serious implications in terms of making sure that your employees are notified about it, or you sign up for it, and if not, there's actually legal penalties.
So let's stop there for a second.
Yep.
If I'm a business owner right now in Minnesota and I have a simple IRA set up, or a 401k like we do at iWealth, can I just ignore it? Am I good?
Nope.
Okay.
You've got to opt out as the business owner.
So what's that mean, Shawn?
Yeah, so there's going to be a form. So this is going to be a rollout in stages. So the bigger employers are going to get notified first. Basically, anybody with a tax ID is getting a letter.
Okay.
All right. So, because they don't know really anything, but they're going to roll it out based on tax IDs. Okay. So if you've got under 5 employees, you probably are in that ignore it category.
That you could potentially...
Yep. So 4 employees.
Well, wait a minute. What happens if I have so whether I have a 401k simple or anything, if I have under 5, I'm probably okay.
Yeah. On multiple levels, you're okay.
Will I still get a letter?
You probably still will get a letter. Okay. Because they don't really know how many employees you have. So First step, you get notified. If you have a 401k plan or you have a simple IRA plan already in place, then you can opt out of this Minnesota Secure Choice program.
And we'll see what the letter says, whether it's a website we have to go to.
And whether they give us an easy way to get to the form or not. But otherwise, we'll have it when it gets printed.
Is there a deadline to get these stuff set, JP? Is there deadlines or what?
Yeah, so it's, again, rolled out in phases like Shawn mentioned. So the employees with 100 plus employees are going to be the ones that are notified first. And they basically have from April to June of 2026 to file for an exemption or enroll in the program. From there, it goes from 50 to 99 employees with a new deadline of July to December of 2026. Then they go to
so it's like a phase.
25 to 49 and so on and so forth. One big clarification is that on the 5 employees, it doesn't matter if they're part-time or full-time. It's based on number of employees that you have. It doesn't matter if you're the only full-time employee and you have 4 part-times. You're on that 5 employee limit.
Yeah, and you can't exclude.
Well, that brings up another question. What if they're 1099 or W-2? Do we have to clarify?
So 1099 would be a
contractor?
Independent contractor. They would not be an employee.
Okay.
But if you're paying them W-2 wages.
But if you had seasonal workers and you had 10, all of a sudden you're in, right?
Mm-hmm. You're in. Yeah.
Mm-hmm. Okay.
So you had to have offered it. The employee can opt out.
So what's the offer look like then? So I find that I have 10 employees and I'm not offering a 401k or anything like that. Like, what happens then? Is it a state plan? Can you guys set up the plan? What's it look like?
Yeah, the program that the state is offering is run through a specific organization. There would be no advisors on it. You're self-help, right? You're just going to go there and figure out their program and do it. Through iWealth, we can set up what are called payroll-deducted IRAs or payroll-deducted Roth IRAs. And we can use one of our providers. Now, all of a sudden, you can provide your employees with professional assistance in it, right? And if they want to engage in financial planning, great, that's what we're here for. One of the keys of this is if you set up a payroll-deducted IRA program, it's not an ERISA covered plan, therefore you do not have a fiduciary responsibility in it, right? So you're offering a payroll program. In this case, you're not offering an actual retirement plan. You're giving them a conduit.
Okay. What's going to be, like when you think about from a business owner, JP, what's the cost to the business owner if they have to set this up then?
Yeah, payroll deducted IRA, there's no match or anything. Through, again, Minnesota Secure Choice, there's no cost necessarily to the employer because it's just the employee opting to participate in the program, and then they defer a percentage, and the employer is responsible for remitting those payments, however, to the Minnesota Secure Choice program through a portal and things like that.
So it's bookkeeping expense versus a simple IRA is a 3% match. That's they got to put in, or a 5% 401k match or something. They don't have any of that stuff then. It's just payroll expense.
Correct. And one of the things I did find interesting, which I hadn't heard of before, if you don't submit the contributions within 30 days, you get a notice and you get another 10 days, but you can actually get a misdemeanor if you don't submit your contributions in a timely manner.
Yeah.
I was surprised when I read that.
Let's not go to jail. But
Agreed.
we laugh about it, but we've all been around long enough where we've seen employers that just get behind or something like that and don't put in the...
Or something as easy as a payroll company is changing. Like all of these rules that have come about since really 2017, rules tend to come before the companies and the advisors and the tax preparers before they can handle it. The rule comes about before the stuff is built.
Yeah.
It's really challenging.
So listening to this, what comes to my mind is if you have over 5 employees, you need to have a plan, whether it's this new plan that they're forcing you to do, or it's a simple plan or a 401k. So if I'm in that if I have 10 employees, have nothing, I can do this plan, this Minnesota plan they're going to force me to do. Or can I set up a 401k or a simple, and then that helps out too, because now I'm offering a plan?
Yeah. Exactly. Yeah. And a key feature that Shawn mentioned earlier, you can go and do this through Minnesota Secure Choice, whatever it ends up being called finally, or you can set up a payroll deducted IRA. We have the ability to do that, Simple's 401ks. The default option is Roth in the Minnesota Secure Choice. Well, they don't talk to anyone. There's income limitations and things like that. So if all of a sudden my husband or wife is a high income earner and I'm contributing to a Roth, I'm not talking with anyone to determine that I'm actually ineligible to do so.
Yeah.
Which again surprises me that they're just going to roll this program out and it's on the individual employee to figure it out on their own.
So it's interesting. So if you guys don't know this, in a 401k, you can have a Roth 401k. You can make $500,000 and put your money in a Roth 401k. You don't have income limitations, right? But in this, because it's a payroll deducted Roth,
it's officially just a Roth or just an IRA. The payroll deducted is just the conduit.
Okay, so then are you subject to the $8,000 maximums and stuff like that then too?
Correct.
Okay.
Yep.
So,
and the earnings limit.
Okay. Yeah, so you're subject, yeah.
Yep.
So again, I set this up, an employee says, great, now I can do this plan. Employee says, I want to put $1,000 a month in, they can't.
Correct.
They can only go up to 8.
Yep.
Correct.
So then they got to look at a different vehicle or something like that.
Yep.
Interesting. So letters are coming. I mean, if somebody wants to tackle this, it's like grab your letter and talk to somebody like you guys, like a professional that says, here's your options. What's it cost, JP, to have a simple IRA? What's it cost the employer?
So to maintain, and again, there's different ways you can set it up. I'm going to just comment on the most common. Setup cost is really nothing. Employees have a account fee typically, depending on where it's at. an annual kind of maintenance fee for reporting and sending out statements and so on and so forth. And then for the business owner, there's likely a 3% contribution match based on their total salary for the year. Yeah. So those are kind of your two costs.
So the employer takes their payroll, says 3% of that would be their cost to have it, but it's really going to the employees.
Correct.
As a match, and it's their money. So that's a simple IRA. There's a lot of different vehicles. Shawn, 401k, a little bit more complicated, more rules, but what's the cost there? Because there is more cost to have a 401k.
There is definitely more cost. And just like the simple IRA, the employer can embrace those fees, right, and can pay that $10 annual fee for that participant if they want to, or they can let that fee go to the participant. In a 401k, we're going to have quite a bit more administrative work to do. They're going to have quite a bit more fiduciary work to do. There are certain types of 401k plans where we can open up and offshore that. We can hire a trustee, we can hire a third-party administrator and things. Each step of the way comes with a cost. What I always say is if the employer, the owner of the company, if they want to try for themselves to save the most money, pre-tax or Roth, okay, right? If they don't think that they want to save that much, 401k is probably not the way to go.
Right.
Just burdensome, or can be burdensome on the logistical side and things like that. They got to be involved with it. Yeah. And if you're not really going to max it out, stick with a simple, because that's what it's.
And you can have upfront costs. You can have 5,500 filings that cost you $1,500 a year. They're just more expense to a 401k than there is a simple. There's SEP IRAs.
Trying to keep up with the tax law changes and having to amend your plan.
Yeah, there's individual 401ks, like it's a chicken soup, alphabet soup kind of thing on which plan you go with, right, or what you need to do. But I guess the bottom line here for a business owner is you're going to be forced to think about this. You're going to be forced to make a decision on what you're going to offer, and you don't have to work with your payroll companies or whatever. So good. So I think I got my head around. Anything else I'm missing on Minnesota Secure? Did we cover the high points that a business owner would need to know without getting in the weeds too much?
Yeah, last thing I would just mention is that apparently business owners are going to be able to file for that exemption early if they so chose. The site is supposed to go live January 2026 from what I've read, and it did say, if you've got 10 employees and you have a simple or a 401k set up, you are supposed to be able to go in there, file the exemption, and be done with it, rather than waiting until 2027 or 2028 when your rollout comes.
Okay, so we didn't talk about that. So 2026, this is starting. It's phased in. Will everybody have to start something in 2026, or will it be 2027? Do we know that answer? When we'll actually have to start putting money into self-directed?
Some will be 2027.
Some will be there. Depends on the phase out then.
It does. It really depends on the phase out.
Yeah. Okay. So then let's switch gears. Let's go to Secure Act 2.0. This has been around forever. It's a huge behemoth tax code deal that the Fed did years ago, right? And they continue to give us guidance, which is, you can get way in the weeds in this. What are some things that people or business owners need to be aware of going into 2026 with Secure Act 2.0?
The idea that if you want to participate in the catch-up contributions, so you've got the underage 50 has a maximum amount that they can put in their plan, and if you're over age 50 and you want to save more, whether that's mostly focused on the pre-tax side for this conversation, but if they want to save more, they would use the catch-up provision. A lot of those rules changed under Secure 2.0. So coming up in 2026, if they're over $150,000 of earnings, their catch-up needs to go in Roth.
Interesting.
So they might have been using the catch-up to reduce their taxes and put more in pre-tax. Now they've got to put it in Roth.
So you're a high earner. Doesn't matter if you're an owner or not.
Correct.
This is anybody on the payroll, high earner over 150. Extra money they're putting in. What goes into Roth?
So let's say your normal maximum contribution for under age 50 was $23,000, and the catch-up is $7,000. Yep. I put in my $23,000 and I stopped there. No problem.
And
I can do it all pre-tax.
That can be pre-tax. Sure.
It's that next dollar. I want to do that catch-up. I want to put that next $7,000 away. If I normally had been doing that as pre-tax, now I.
Okay. So
by the way, your plan has to allow for Roth.
Well, that's where my head went. JP, not all plans have 401, have Roth.
Yep.
401k, so they have to offer it now. If you're an owner of a business, JP, what does that mean for taxes? So I have a 401k. It's your money that's going in. Like, walk me through what that means if it's going into a Roth, then the employee isn't going to have as big a deduction at the end of the year because some of it's...
Yeah, like, same thing as Shawn's scenario before. If you were putting in 23 and doing the catch-up contribution of 7, so you're putting in a total of 30,000, let's say, and all of it was before pre-tax, you're getting a deduction on your income. If you make 155,000 or 160, now you only claim that you made 130. In this case, now you're only going to be able to take 23,000 off of that 160, and that 7,000 is going to be taxed. Great, you're still saving it and things like that. You just have to be aware that you're no longer getting that tax deduction today,
right,
on that extra dollar amount that you're putting in.
Right. Shawn, I may be making this up, but is there something, correct me, is there something going on with regards to the match as well from the employer where it can go into a Roth? Is there anything that's going on there?
Yes. So again, the law came about to say that is a possibility. Each payroll company and each record keeper may or may not have that ability yet.
Okay.
So you may not have amended the plan to allow, basically it's a Roth conversion. I mean, you're kind of doing, the employer's giving the money, but now somebody's got to pay the tax on that.
Yeah, because if all of a sudden I'm the employer and I'm matching $5,000 in JP's 401k, I want to deduct that as the employer.
And
but
so that's your
yet if
expense
it goes
to the
Roth,
business.
then JP probably makes an extra 5 and he pays it. I deduct it. He pays the tax as an income and then it's taxed. Holy moly.
Yeah. So somebody's got to figure out how to bump that paycheck up, or at the end of the year, is it a 1099? Because employee deferrals really have to happen in real time. The employer took it out of my check. I expect it to show up in my 401k quickly. The employer match doesn't have to happen on that every payroll. Some employers wait till the end of the year. Some employers do it monthly. Now, I might have a paycheck. I'm the employee again, and I wanted to do this, have my match go into the Roth. Well, if you put all the match in at the end of the year, I might not have a big enough paycheck to do it.
Sure. Interesting. Yeah. Is that a 2026 thing, or do we know? Yeah. So
it may have actually been a 2025 thing, but nobody was ready enough for it to even let that cat out of that.
Yeah, I mean, you're probably catching on by now. Like this, it's convoluted. It's so hard to figure out, and everybody's trying to wrap their arms around, which is why we're doing the videos, just to try to help, like just transparency in what's going on. Simple Ross, is that a thing now too?
Yeah. So
and
now
how's that
starting in 2025, employers were able to add a Roth component to their Simple IRA plan. I've got some clients who are doing this, and back to, I think it actually went live in 2024, but again, no one was going to be ready for it. None of the providers or anything like that were going to be ready for it, so it hit the ground in 2025. We still don't have the ability to do it at some companies.
Major record
some
keepers.
Major companies still aren't there.
What's it look like? Who is the employee? So when you sit down with 5 new employees, and doing a simple IRA, do you ask them pre-tax Roth, or is that in their choosing their 3%?
Yeah, just like a 401k. Now you're saying, hey, do you want to contribute 5% Roth or 5%?
Yeah. So remember,
pre-tax?
this is the employee's deferral, the employee's contribution, not the employer.
Yeah.
But
So
now I'm running into someone who's worried that QuickBooks might not be able to do W-2s correctly based on the Roth deferral. So I guess we'll see come into the year on if there's manual things, but they keep rolling things out ahead of anyone.
The cynical side of me says
being ready.
All sponsored and led through by a payroll company, because it really hasn't changed the dynamics of the record keepers. They were still going to get the money, but it seems like somebody's trying to corner the market on who can help, right? The little guy can't keep up with this stuff anymore. The little guy, you need to bring on more and more.
I guess what's rolling through my head, if you're a business owner that we're talking to today, if you don't have a Roth component on your 401k, you better add it. And you might want to consider having a Roth Simple plan if you have a simple IRA, because Roth's a good vehicle for somebody that's not in a high income bracket to be able to put money in and have tax-free money down the road. So I guess if I was an employer, I know we have the Roth component. Like if I was doing a simple, I would try to add it, JP.
Yeah, the one thing that I'll clarify, and again, I think we've gotten a couple of different answers on this, but I'm willing to step out on a limb here.
Allegedly.
Yeah, I've gotten a few different answers on this, but I don't believe the Roth catch-up rule applies to simple IRAs. And again, I'm stepping out on a limb because we've read it different ways, different places, but from what I can tell, it's 401ks, 403bs.
We've all seen IRS rules that came out that appeared to be very clear, and then later the IRS says that's not what we meant. Now it applies this way.
Yep.
Even though today everybody's reading it and saying, 1 + 1 = 2, the IRS might come out and say, well, we meant 1 + 1 = 3.
Right.
So go back and do it.
Right. Yeah.
We'll see.
Yeah. So we talked about Secure Act 2.0 and some of those things. Is there anything else that's sticking out with either of these subjects as a business owner hits 2026 that they should be thinking of, other than I'm sure they're sitting there saying, I got to talk to somebody. And we're here to have that conversation, or whoever you're working with. But you need to talk to somebody.
Yeah. I think the keys are if you're offering some of these things as a benefit program, right? You're trying to give a benefit to your employees and a benefit to yourself. You owe everybody the responsibility of figuring out what you've got and how to improve it.
Right.
That's a given every year. But in this case, really the concept of finding out, starting with your own situation. I've got X number of employees. Make the call to us. Let us help figure out, what applies, what doesn't apply,
Right.
and help you figure out what is important to you. Right? Everybody's case is going to be different.
Yeah.
Every single company is going to be different.
Yeah. And to Sean's point, we triage that for clients. Like if we have a brand new business owner, we'll go through and ask them enough questions to try to lead them in the right direction, whether it's a simple, a SEP, or 401k, or an individual 401k, or whatever those things are. Yeah. Anything else you'd add, JP? Anything that we're missing here?
I would say employee notification. I think that's a big one, and that's going to be a part of this rule. Again, whether it is through Minnesota Secure Choice, they have said that they're going to send out notices for those that are out of compliance and send another one and then send a $100 fine and so on and so forth if your employees aren't properly notified. Now, how are they going to track that and things like that, and how efficient are they? But making sure your employees know that there is a simple plan or there is a 401k plan.
Right.
Or we've set up this new Minnesota Secure Choice program.
Yeah.
And document it.
And people opting out of programs, it really, if you didn't have it documented before, Brad, we have a 401k plan, here's the information, would you like to participate? If you say no, in the old days it'd be like, okay, catch you next year.
Yeah.
Now it's
sign. Yeah.
Right. Yeah. When somebody's going to fine you, or misdemeanor last I heard, that's a
could
bad
get
thing.
civil
Could
go beyond civil penalties if you submit the
Yeah.
cash or whatever.
Crazy.
Or it becomes a recurrent issue.
Crazy.
Was mind-boggling, but I would definitely document if my employee does not want to sign up.
Yeah. Awesome. Well, thanks again, JP and Shawn. I really appreciate it. Hopefully it was helpful to you business owners. If you need any help, feel free to reach out or get to your professionals and talk to them, whatever it is. But just know that this stuff's out here and we're just trying to help educate and take care of things.